Hello, hello, hello. Mic test, mic test. Hello, guys, and welcome to the 57th edition of the Trading Opportunities webinar. This is Nirav, and currently I'm just testing. Yeah, things look to be working fine at my end. Let me know, guys, if you can see the screen share as well as hear my voice. Thank you, Steve. Thank you, Fraser. All right, guys, since everything looks to be working fine. Hi, Malji. In that case, guys, let's quickly get started with the legalities here on screen first, and then we will get ahead with the actual webinar. Hello, Philippe. Good morning, good afternoon, and good evening to you guys. So first of all, here on screen, the legalities or the disclaimers suggesting that all content presented here is purely for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading or investing or for any other purpose, you yourselves will be liable for your profit, your loss, or loss of profit. With the legalities out of the way, let me give you a very, very quick introduction. My name is Nirav. I'm the admin and owner of 50eyes.com website, which you can see on screen here, and the YouTube channel 50 Eyes Market Analysis, where we have been broadcasting this series of trading opportunities webinars for quite some time. This is the 57th iteration. So till now, we were doing these every Monday, Wednesday, and Friday. We are looking to currently switch to Friday only, and the timing will remain the same as 2 p.m. GMT. Right. I'm also the author of the book Think with the Market: Secrets to Achieve 80% plus accuracy using Elliott Waves, and have had exceptionally high accuracy in my previous webinars or forecasts, which I have done. Yep, there it goes. So for the last 6 years, whatever webinars or videos which I have published, I have kept a track record of it in these spreadsheets. They will take some time to load, but as you can see, I have had an accuracy of 82.22 in 2221, 2022 88.52, 1984.88, 1884.61, 1787.5, and 1683.34. These are all public track records, and all these webinars were done, of course, live, just like this webinar. And the results are all mentioned here. As you can now, it's loaded. This is instrument name, the date, and the analysis, and whatever happened with the instrument after our analysis is mentioned here. Things that worked out are given +1, and that did not work out are given -1. So this is the way these analyses have helped me to document the outcomes, right? And with that out of the way, let's now head over to our actual content here. But the one thing, guys, let me know first of all, how many of you guys actually here who attend these webinars regularly, that is, who are in live chat, actually trade the Forex pairs that we discuss. Let me know. Okay, Steve does trade them. Steve says sometimes. So what I'm planning to do is going forward, keeping only Euro USD here, right? And reducing the frequencies, or basically discussing them only if there is something very clear. Because Euro USD is an important pair. It has strong correlations with the major indices, right? And doing that, we may reduce the time period of these webinars, and that is likely going to increase the total number of participants, because currently these webinars are getting quite lengthy, and I think that is one of the reasons we were not able to achieve a very huge amount of participation, right? Let me know your thoughts on that. With that, let's now first continue with our discussion. Euro USD, first of all, on screen here. One second. Yes, so EURUSD on screen here. We discussed last time. There were two main possibilities. First, we were assuming that this is going down as a WXY kind of correction. And if this was the X complete here, then we expect that the wave Y down can continue from here or can start forming from here, right? However, this has gone almost near the start of it. Once it crosses the sorry, not the start, almost near the end of wave X, right? Once it crosses this high, then we will have to consider that either this is not an X, that is, this is some other formation, or the wave X is somewhere over here above the current price level, right? So based on that, let's see what strategy or planning we have in mind. Right. First of all, it is very likely that this market is now going to go up. So short term wise longs, that is 15 minutes, 5 minutes charts, I'll be looking for longs on this counter. Right. As far as the counts are considered, we can simply look at this chart at this point from this point of reference around 15th March 23 and 1.05156 price level. And we can assume that this leg up, which we have already counted as 5 wave up, is either leaving a correction getting completed over here or correction continuing sideways, right? Now, we can simply look at it in terms of trading perspective. Keep in mind, I'm not discussing the counts in detail. I'm just more focused towards what is happening here from a trading perspective. So from a trading perspective, the minimalist structure that we are thinking of is that A down, B, A up, B down, and C up, right? If that is a structure, then we can draw this trend line, and now you can see that this trend line is giving support to this price at two occasions after its formation. Second time almost there, didn't really touch it, but this is not the exact trend line either. I have to adjust it a little bit. So anyways, the main point is that it is taking support two times. So we can assume two things here. Either the B is complete. If it is complete, then C should take off. And if C should take off, this high will be taken out, right? In which case we can then project the targets for the wave C to the upside. We can, we'll talk about the targets a little bit later. Simplistically speaking, you can also use this parallel of this trend line, draw it from the A and use the upside of it as target. But we'll discuss more of it later. Second thing is, or the secondary hypothesis is that the B might still be continuing sideways, in which case it can go down a little bit, but it should not, in my understanding, go lower than 1.07104. It can theoretically go lower than this level, but not too much. And generally, it stays above this level. So that's why I'm saying it should stay above this level of the recent low, as I just mentioned, 1.07133 something, right? And if it does stay above that, then we can consider this as a B and look for setups for upside later on. However, it does, as I said, looks more of the case where the B is already over and we are already going to take out the high very soon, right? And as I was saying, we are looking for upside targets. It won't really be much of an issue because the immediate targets are already packed around this 1.10027, 1.1 basically. So roughly speaking, around here, we already have 1.1 as our target level. So we don't need to figure out those fancy targets. They were coming around or above these levels anyways. So this is the way to play it, right? Short term wise, I've just discussed the count. And I've discussed the perspective for both upside and downside. So to conclude it, below 1.07116, we will be looking for shorts. As long as it remains above it, we are looking for longs. And as such, on this pattern, we are looking more specifically for short-term longs. Right? Much to add here. Let me know, guys, if there is something I need to, or some level you need to discuss, or any other doubt or query. Thank you, Fraser, and thank you, Philippe. Let's now head over to our next discussion of EUROCAD. So EUROCAD, last time when we were discussing, thank you, Steve. So last time when we were discussing this chart, we were of the view that there's a short-term impulse forming in the downward direction, and I did very clearly mention that this market, if it takes out the upside of the trend line, will result to a possible long trading opportunity in the formation as in an A up, a B down, and C up. So this much was very clear. It has seemingly gone up as what might be a wave A up. Let me just change the colors here. So it does look like it has gone up for an A. Actually, it is quite clear of account. And it does also look like we have taken the support, which leads to a sort of classical setup here. Breakout of the trend line and then test, and then again a test, so retest. So this is a very nice setup, and what is it suggesting? It is suggesting that this market may show one more leg up, right? I would say it's a strong setup. If something else happens, it's still worth taking the risk because it is that strong. So as far as the targets are concerned for the wave C to the upside, we have already got a retracement level 1550 and 61.8%, which is currently coming around the prices of 1.48 to 1.4835. Right. So this is where our target is. Secondly, we can also calculate the wave A's measure and project it from the end of wave B. And it is exactly coming at the end of the resistance level. So that's good. That gives us a higher probability target, which is near the end of this white resistance zone. So this gives us an exceptionally strong long setup on EUROCAD. Definitely keep it in the watch list, and I believe you guys already know how to play this one. But still, if you guys have any doubts or queries, do let me know in the comment section of the live chat before we move over to our next chart of USDJPY. Thank you, Madhavji. Thank you, Steve and Philippe. In this case, let's head on quickly to our next chart, USDJPY. So USDJPY, when we were discussing it last time, I did mention that either the wave X will complete over here, that is near this price level, or if it goes up, then it can still be considered wave X, although the possibilities or the probability of this being a corrective continuation will reduce considerably, right? So let's revisit that analysis and see what's going on right now. So if the wave X was to be forming here, it most likely would have continued and completed over here. Why do I say it? Because it's generally the two. It's actually two things from a price action perspective. We have also taken out resistance zone, right? And secondly, it's a less likely pattern that the X becomes a expanded structure. So from both perspectives, the possibility of this being the X now are reduced. and this being the X here and this being the Y are becoming stronger and stronger, right? So what does that mean from a trading perspective? That means that we will now take the upside possibility a little bit more seriously, right? Of course, as I mentioned very clearly, still the wave X could be here and that could mean the wave Y is continuing like this. But we are not interested in that, at least as of now. Only below this level, around what is this 130.8, we'll be taking that idea more seriously. As far as the price structure is right now, what I can see is we may have completed a possible impulse here. Hmm. The only issue I am facing is this placement of wave 4. Might have to look at it later on, but it does look like it has sort of done the bare minimum work for a structure ending here. It could also be, as we have previously counted it, taken as a diagonal. Although they do seem a little bit too not that what do you call converging, to be precise. So I'll wait here for a little bit more clarity. But in the meantime, what I'm really thinking is that if this really has completed a structure to the upside, then a short-term pullback might be seen, right? So a short-term pullback generally will go to 50-60% retracement level. So that is the price level I just marked. What basically it should look like, or generally would look like, is something like this. So if I do see a leg down followed by a minor pullback, then I'll be looking for adding shorts over here. That is the only clear setup I have. That is, after this and this is complete, we can place our alerts over here, and that can give us a short-term sell-off or selling opportunity. That's the only thing which is clear on USDJPY so far. Swing selling is not clear because if the whole structure has completed the wave 2 here, then it could just be a wave 1 up, a small pullback for 2, and then a new leg up for 3. So shorts incoming are, or the shorts we are planning that might show up in the future or the near future, are only for shorter time frame or kind of intraday kind of move. Not much to add here on USDJPY. Let me know, guys, if you have any doubts or questions here. Before move to EURJPY chart. Well, thank you, Steve, Fraser, and Philippe. In that case, let's quickly check out this chart. Again, this one has not moved as expected. Actually, let me just quickly discuss what we were thinking last time. Last time when we discussed this chart, we were thinking that okay, I have already updated it. So we were thinking that maybe this is a correction, A up, B down, and C up. And if it's complete here, then whatever this movement is, it will eventually go down. It could be a 1 down, 2 up, and then another leg down. So the basis of that whole analysis was that this market should not take out the high around the price level of 145.52 roughly, or 55, 145.55. It should not take out this high, which it has done. So here's the updated outlook I have on this. The updated idea is that as long as this market remains below the price level of 148.441, we are going to continue assuming that diagonal structure which we had originally assumed on this market. And the only thing which has changed is that instead of assuming that the whole structure is complete here, we are assuming that the correction is continuing. and the correction continues as a that I did not update here as a wave here, a B wave here, and this is going up for a C wave, which will have 5 waves inside of it, right? So long story short, if this count is really being followed, then any or the expected corrective movement which comes in here or the sideways movement, if it's a flat or triangle, would be expected to give a upside leg, and that is what we expect to trade, right? So long story short, we expect something like this. And our idea will be to wait for this part. Once it is found, we'll look for longs for trading the fifth wave to the upside. So this is the updated view on EURJPY, right? And also importantly, it should not, no matter what happens, cross this high 148.366. Actually, it can if it's a ABC, but we are assuming it primarily as a possible wave one. So yes, this level, if crossed, would relegate the possibility of wave one, and then we even will have to reevaluate the whole situation, because in that case, it is possible it might be completely doing something else. Let me know, guys, if you have any questions on this chart before we move over to the charts of crude, gold, and then indices. Thank you, Steve. Thank you, Fraser. In that case, let's quickly load our, or actually discuss our chart because it's already there on screen. 2251. So here is a chart of WTI's crude oil on screen. And last time when we discussed this chart, we were of the or holding the view that this is an important trend line, this white trend line. And we were expecting that the market can reverse from this level. Maybe wiggle around a bit, like a little bit up, a little bit down, and then eventually fall down. But it has so far only done the upside thing, and it has gone up a lot, suggesting that perhaps the reversal that we were thinking is not going to happen here, right? So the updated outlook I have here is that this market may have completed the down move here. Again, keep in mind, it still has the possibility to fall, but we just don't have the evidence for it. So I have left an alert around 69.67 and left it to be as is. And the current outlook, as I said, is that it may seemingly be going up as an impulse, right? If it really is going up as an impulse, then we relegate, or we'll have to relegate this trend line and go with this one, which gives us upside targets for wave 5, as I've discussed previously, near the high of the trend line. So as soon as this trend line is touched, or the upside trend line is touched on this channel, then we can say that the targets for wave 5 are achieved. It is not really required to do that, but it mostly, or is expected to generally do that. Is just a general guideline kind of thing, right? So that's our take on crude oil, that until we see some clear evidence of bearishness, or strong evidence, not clear evidence, we will assume that possibly the downside may have completed, right? And I do say strong evidence because even if this impulse is complete to the upside as a 1 up, 2 down, 3 up, 4 down, and 5 up, you guys already know that it will be followed by a 3-wave structure to the downside, right? So when this happens, you need to be mindful of the fact that it may now actually be doing something, or it may now actually be changing the direction instead of just assuming that the trend is continuing downside. Not much to add again here. It's more again of a wait and watch kind of scenario. One more important level to watch out would be around 73.14, basically somewhere near the lower part of this wave 4, because that is a price action support region. And also we extend, actually, we can check the past data. It is also a support region. 4 supports here, actually 5. One was tested as a resistance. So we can actually move the alert here already. 72.49. I will like to be notified below this level. Let me know, guys, is there any doubt, questions before we move over to the chart of gold? That's nice to know, Steve, and thank you for sharing it with our audience. So Steve here was able to catch the trade we recommended on the short side and has also made profits. And thank you, Fraser and Philippe, for the confirmations. In that case, let's quickly head over to our chart of gold 26. So it is actually moving precisely as expected. Literally nothing new to add here. You already know we suggested last time and last to last time as well that we expect that this market can continue sideways between the price range of 1934 to 2010. Only time the things will be understood as not moving as expected is if the market goes below 1919. Nothing like that has happened, and also the expected progression is now becoming much and much clearer with time, and it looks like a triangle is in this progression. Now if it really is a triangle, then it evens things out for us. Then in that case we assume that it should not cross 1944 to the downside, right? So this is how you adjust running positions. Again, if you are following us, we are already partial longs on gold, already holding partial longs on gold. And the entry for adding more and how to do it, I have discussed 2 3 times already. Just check the last 2 webinars in case you want to check that part out. So as I said, we expect more upside to follow, and I was checking for conservative targets here. It comes out that the minimum target or the most conservative target is actually just 2019, right? We can see even at least minor or also possible major profit booking at this level. Yes, I would like to be very more optimistic because it looks like an impulse is in progression, but we cannot ignore the possibility that this may very well be just a action in play. Again, this possibility is very low or low probability scenario, but we still cannot rule this out for now. That this market is forming something like this. So keeping that in mind, we have the 2019 level intact here, and we'll see how it goes. But yes, it is what it is. If it really does sustain above 2019, that is, if it crosses above it 5 10 points, let's say 10 points, and then retest it, forming a possible support here, then it will be a sign of much more strength to come. Right? Again, that's just the possibility we are thinking of, but I've suggested the important level and the structure is already working as expected. Nothing really to add here, right? 6 now, and let me know, guys, if you have any questions or queries here. Yep, 1996 is the current resistance, and also if we are forming a barrier, then it will go and take the wave D high near the wave B high. So yes, 1996 is actually the short-term resistance here. It actually comes down to 2000, so almost there, 2000, let's say. For those not understanding what we are talking, we are suggesting that may not be a converging, but a barrier triangle, in which case the D can touch the or go near the end of wave B. So this D will in that case go there, and then the E will come down. That's where the target comes from. All right, Fraser, Jill, and Philippe and Steve. So in that case, let's now head over to our S&P chart, which is showing much more strength than we actually expected it to do. So S&P 500, when we discussed it the last time, we had a running case of possible bearishness. We were thinking that maybe this was a diagonal and maybe this was an A up, B down, and C up, and we formed the trend lines here. The idea was that if the market went below this trend line, this lower trend line, then we'll be calling this a possible shorting opportunity. Nothing like this happened. It never triggered the second sell off, right? Or the expected sell off, I must say. It has since then gone up, and not just up, it has gone up with quite some strength, right? So now let's quickly evaluate what the situation or the scenario might be here. Actually, I already have this discussed in our past webinars. There are two counts we are actually following on this counter. One is the bullish one, and other one is the bearish one. Both are still valid. So let's just quickly look at the bullish counter for now, or the bullish scenario for now. We expect that around here at this point of reference of 4145 something, we have a 1 or a, and this looks like a flat kind of correction completing here, right? So if that is the case, then the next leg which is coming up will definitely take out the high of 4194, right? And possibly go much higher than the 4194 level. That is our general expectation on the S&P chart. If the bullish scenario is playing out, before we discuss the likely levels of which scenario is playing out, let me just quickly also discuss the bearish scenario. Now, the bearish scenario suggests that this is all just part of a correction. So all price movement within this price range of 34.94 to 43.27, 28 something is all a corrective structure for possibly a wave B, right? And in that case, we can assume that maybe still a triangle is forming. So this possibility is not yet relegated. If this is forming a triangle, then we can see more sell-off incoming. However, what is a little bit concerning regards to this bearish outlook is that this price action is not what we would generally see in a triangle. Generally, I'm saying not always, or expect, I would say. So long story short here, we don't need to do much evaluation here. If it really is doing something else than the price movement above 4185, let's say, will give us the clear confirmation or relegation of the bearish count. And once the bearish count is relegated, we only are left with the bullish count. So long story short, swing perspective 4185, yeah, 4185-ish level, if it's taken out, then we will be left with just the bullish scenario here. So S&P swing perspective 4185. Okay, I do have some alerts here, but these are for short-term analysis. Do let me know, guys, if you have any specific questions here. I'm just discussing the swing perspective here. Also, from a short-term perspective, if the reversal is going to come, then the next level which should act as a resistance is 4110. So if we really are going to see a down leg, as we discussed in our scenario, then 4110 is the level to watch out for. So S&P is definitely a wait and watch, both from taking swing positions as well as for taking good entries on a short-term time frame. All right. So in that case, let's now head over to our Nifty chart. Nifty. Yes, guys. So we haven't currently decided the exact timings for the new project, but the project will be covering Nifty and Bank Nifty in quite detail. That is our current idea, right? We may start with the weekend or do it just like we did the trading opportunities webinar series, that is 3 times in a week. And also, if you have any feedback or ideas, do let me know by typing in the comment section or by just contacting me via the contact us page. But for now, our plan is to go in April with a coverage of the Indian markets separately from these webinars. And also, if you have missed the earlier announcement, these webinars, that is the trading opportunities webinars, for now, I'll be moving them to Friday only, right? And we will see how the participation remains. But for now, Friday only, we will be conducting them. But they will still be live. They will still remain trading opportunities webinars, right? And will also possibly reduce the Forex coverage, just keeping Euro USD as the focus. So that's that. And let me just quickly load up the chart of Nifty here. So Nifty, we discussed last time. One second. There are some comments here. Very good. Waiting for the coming webinars. Madhavji is saying yes. Thank you, Madhavji, for your interest. I'm also excited about this new project and how it will perform. So in that case, now let's have a head over to the chart of Nifty, right? So previously, when we discussed the chart of Nifty, we had two ideas, right? The one idea or the first idea was that we were expecting that this market is forming a possible wave 4, but then I discussed that it looks more bullish over here, and we discussed the second idea, which seems to be the one on the charts right now. So what is this? This is, again, we are just discussing the super bearish scenario. I'm not discussing the bullish one. The bullish scenario basically is that this whole structure is complete as a correction. One second. This whole structure is possibly complete as a correction over here. And if it really is complete as a correction over here, then it can just go up, and whatever way it goes up, it will either be going up with an impulse first or a diagonal first. So nothing much to add there. It remains to be seen, right? So what is so important about the bearish scenario? We discussed last time, and I'm just repeating myself sort of over here, that we may have a resistance, or we do have a resistance, actual Fibonacci resistance between 17,320 to 17,428, roughly speaking. So between this level, we expect that this market may give us a possible reversal. It has already reached there with quite an impulsive movement, with a gap up, actually following the global cues. Right. One thing important to note here is that if we measure the last leg up, we will find that it has literally gone just there, right? So precisely, it has touched the last level's high. It has not broken it. So if it really is of the bearish outlook, or if the market really is looking to go lower, then we can expect in the Monday session that this market may open gap up, touch the highs, and then form a bearish candle, right? That's just a possibility I'm hypothesizing. And also, this also shows that if it gaps up, or even if it doesn't gap up but goes above this resistance level by, let's say, a good margin, let's say around it goes to 17,460 level or 70 level, let's say, then we will have to assume that maybe this market is doing something other than what we were expecting in the first place. Like, long story short, watch out for this resistance zone. If there's a reversal, then we'll look to play it. If it goes above it, then we'll look to evaluate if it's a short-term false break, or if the complete bearish scenario needs to be relegated. So that's that for now. Nifty shorts still possible, and wait and watch. Let me know, guys, if there's any doubts or questions before we head over to our last chart of BTC. All right, Jill, Steve, Philip, and Fraser. In that case, let's now quickly jump over to our next chart of BTC, which is actually moving as expected. TC 4122. So, anyways, let's just quickly see what's going over here. So, BTC, when we discussed it last time, we were of the view that this market may very well be having the wave 4 complete over here, right? So, based on that, we had this trend line. One second, let me just redraw it over here. However, given the price action, I had readjusted it, right? And I was of the view that maybe this wave 4 is, let me remove everything, is either complete over here or perhaps it is just going sideways. Now, the current price action, even if it was continuing sideways or is complete over here, both are still suggesting upside, right? So it's a long in that respect. And secondly, the current price action which has developed very recently is suggesting that it has possibly completed over here, right? So given that possibility, it would be not unwise to take some risk over here with the stop losses below 26,479, let's say 480. Sorry, what is this level? 26,530 something level. So just check it on your chart. Different data feeds may have different price levels. Long story short, we are looking for possible upside on this counter. And we have already discussed the targets in the previous discussion. We did mention that the upside of the channel generally will suggest a minimum or conservative kind of target. And in this case, the conservative target goes at the price level of 33,000 right now, as you can see. Right, I have not done any trickery or anything advanced. Just drawn the channels and assume that if there's a fast movement, then the market will test the channel at the in the next few minutes, in which case it can go to 33,000. So again, that's just a guideline. It's not really required to do that, but we have a clear idea of what it may be able to achieve if the movement remains as fast as it is. Right, with that out of the way, we think that's about it for this webinar. And also, guys, make sure you hit the like button before you leave, and make also sure that you share the content after the webinar is complete. For the upcoming webinars, as I have made it very clear, we are looking to keep them to Fridays only until I see more participation, or perhaps I might change the format a little bit. We will experiment, but the long story short, we will be looking to see you guys on Friday. So again, even in those webinars, we need to maintain a fair amount of participation. So your continued support is again still required. So keep sharing the content, guys. Keep liking it, and I'll see you in the upcoming webinar. Philippe, Jill, Parvez. Yes, you too have a good weekend. Philippe, you're welcome, Madhavji. Very welcome, Fraser. And let's end this session now. Okay, guys. Talk to you guys soon.